Hey, good morning, everybody. It's Hammer. Today is Tuesday, December 16th, 2025. And I having some technical difficulties today. It seems that Chrome and Restream didn't want to play well, but we seem to have it working. So if you're here this morning, say good morning. If you're watching on the replay, well, good luck to you because I don't know how you happen to find it. So anyway, I'm going to dive right in. First, let's make sure we get some people on here, though. Let me make sure it's actually broadcasting on the way it's supposed to. Here we go. I am replying to everybody that's telling me that it's broken because I know it's broken. But anyway, here we are. Let's go ahead and let's get into the good stuff here this morning. It's going to take me a little while to get my mojo back. So I guess I should just stick to the plan while everyone's jumping on. Here they are. They're jumping in. If you're here this morning, say good morning. Help me get started. Remember, you normally could join me live at 9:30 a.m. Eastern time. Technical difficulties this morning. Restream was not working properly. I'll have to clear the cache and cookies. I restarted my computer. Got it working in an incognito window. So it's just one of those technology things. Good morning, Michael Scott Love, Ryan Yardley, Deb Dickinson. Great to have you here. If you're watching the replay, well, it was probably a little clownish this morning, but run with it. If you would like to be kept up to date on what's going on, sign up for those text reminders because I did send one out that there was technical difficulties, and I just sent one out that we managed to go live. So hmmr.io/reminder or use the cool QR code. Also, don't forget, I'll send out an email with the link later today, but we've got discounted pricing for the Vision Plan Workshop that is on the 30th. You get the recordings if you're unavailable to go live, but you have to buy the live event and you'll get the recordings. I don't sell the recordings afterwards. This one is going to be off the chain. Going to be working some new AI angles into it. Yes, AI is useful if you set it up the right way. And I'm going to have a guest on there helping me with it. So we're going to have a great one in this one. This is going to be a great workshop. If you want to go into 2026 with a vision, that's really the idea here. So, all right. Well, good to have Brandy Brickler and Yasmin Martin and Tiffany Teal on. Let me go ahead and switch over. It looks like we got 20 people on. So I'm going to go ahead. Let's go over to what we got going on this morning. So taking a look here. Bottom line at the moment, we're seeing some volatility right now as rate sheets start to come out, and it is about 10 o'clock. Mortgage-backed securities are up about 8 basis points. Don't get too excited, though, because just a few minutes ago, they were down about 3 or 4 basis points. What we really want to focus on, yesterday, we saw a decline in the morning for bonds here, and then they kind of came back up through the afternoon, basically ended the day the same as when pricing came out. No big deal. This morning, you can see right here, this big spike. This was the jobs data spike right here. I said basically it was like a bottle rocket because we set it off and it went and then went and blew up and then it went and fell back down to earth. So it's kind of like a bottle rocket. It popped up and then it exploded, fell back down. We actually went negative on the day here as that reaction and then up here. So if we take a look at the jobs report data, they were looking at about 40 to 50,000. We'll call it 45,000 jobs created. We ended up with 64,000 jobs created in November. I said that the November data was there, but there actually is some October data. They didn't do unemployment for October. They just did non-farm payroll. So non-farm payroll, huge loss in October, minus 105,000. 105,000 jobs gone. We're negative 105,000. So in November, up 64,000. Basically, The takeaway here is a weak labor market, but not a collapsing labor market, a cooling labor market, not a collapsing labor market. So, yes, I'll put that link in the chat. Rob, stick with me for a minute. So, the main reason we saw bonds actually improve a little bit was because the unemployment rate went up to 4.6%. So it was projected to be 4.5. It was previously 4.4, and it went up to 4.6. The participation rate also went up a hair. So it wasn't just that reason that we saw less participation. The change in payrolls, they're showing a median estimate of about 50,000. So I called it 45. If you looked at Wall Street Journal, they were calling for 45 in the Wall Street Journal. Is what they were saying. It was the expected a gain of 45,000 jobs in November and a 4.5% unemployment rate. And instead that came in quite a bit more than that. So the retail sales data also came in pretty important to just keep an eye on, but it was a little changed in October. So really not much of a difference at all. Here's the big takeaway. So we are seeing some more volatility this morning. Let me get my head out of the way. We're going to look at the charts, right? So the 10-year treasury yield was all the way up to 419 and actually 420. So it was hitting that 420 mark. And you got to be smoking something to want that 10-year to be at 420. However, it has dropped back down 416, and bonds have improved a little bit. This is going to help rate sheets, but just a hair, not a tremendous amount, just a hair. You're going to see this help rate sheets, and only it's temporary. So you're not going to see lenders take a snapshot of this. They're going to look at this volatility, and you're not going to see most of these gains on most rate sheets yet this morning, because just a few minutes before that, we were at 101.07, and you picked up 6 basis points right here. And before that, we were negative. So again, you're not going to see much of that. We haven't really seen any change in expectation on what all of this is going to do for the Fed for 2026. Markets currently believe we're going to see 2 Fed rate cuts in 2026. A cooling labor market opens the door for a January cut, but it doesn't necessitate a January cut. And this is exactly the same as what we saw yesterday. There's really, I mean, you're talking, 1% difference in expectation over what we could see on getting a cut in January. We have a lot of data coming in, and this is old data, right? This is October and now November data. So we'll get December data in January. We don't get the Fed meeting until the end of January. So keep that in mind, and it's kind of where we are on all of that. So taking a look here, the as far as rates and pricing and everything else, the reality is this is really not really helpful at all. Even though we are showing is up 8 basis points for the moment, that's not enough to get excited about. It's certainly not anything that we want to make a big deal out of. We're going to watch that 10-year treasury yield. So we've got the inflation data coming in on Thursday. That's the next big report. Would I float into that? I'm at the same spot I was at before. I'll throw it up on the screen here. Anything under 15 days, just lock and consider to avoid volatility. We're not seeing rate sheets improve that much. A couple of basis points at best. And you're probably not even going to see that this morning. There's really not room for rates to improve from here. Not in the current setting. Even if inflation were to come in lower than expected, you're not going to see a huge reaction that's going to drive rates lower. Anything that's got time, if you want to, keep your options open, there's minimal risk. That's the only reason we're floating. We're not floating because we think rates are going to improve. We're floating to keep our options open. But as far as where rates go, we're on the lower end of the spectrum. Rates are still in the low 6s, high 5s for govies, before your loan level price adjustments. And that's kind of where we're at. You're not really going to see much of a move there. So anyway, thanks for sticking with me this morning on the technical difficulties. Glad to have all of you here. I am going to throw that link for the 26 plan. Hold on, let me pull it up here. And I'll pull up that link to join. Actually, I can pull it up right from here. Here you go. So hmmr.io/2026 plan. And I will put that in the chat as well. I know that Ron Siegel is signed up and quite a few others, but I do remember Ron's name. It's going to be a 3-hour workshop. We are going to go over all of the exercises. You will leave with an actual vision plan, business plan, if you will, for 2026. it's a great way to get into the year. I got to tell you, I'm not happy with my 25, and I'm not going to lie. I did not complete my processes heading into 25, and it shows. It shows. Just didn't stick to my plan. So you need to have a plan. Good morning, Amy Blauser and Zane. Hope you all are doing well. So, all right, my friends. Well, again, thank you for bearing with me. It's a bit of a messy run this morning. I'm going to wrap it up and move to the rest of my day, as I know you have to too. Hopefully tomorrow we'll have all of this stuff taken care of and there won't be any problems.